The market has been in an absolute whipsaw since the Jackson Hole announcement last Friday. We're currently down almost 7% since then. Riz and I are going to talk about what in the world is going on. Good evening, my fellow Riz Elite members. This is Chris with Riz International. I've got the man here whose name is on the side of the building. That's right, we've got Rizwan Memon for our market recap webinar. Riz, how you doing this evening?
Doing good, Chris. Yourself?
I cannot complain. It is a good day here where I'm at. I'm hoping that things are going well up there in Canada, but what is not going well is the market is in a little bit of a downtrend. We've been in a downtrend since the beginning of the year, and I want to remind everybody that I've drawn this trend line since, well, let's see, probably about April, and it held true very, very well here with this hardcore rejection of the 200 simple moving average going into the Jackson Hole announcement last week on Friday with a massive rundown in the market. And then there was a bit of hesitation on Monday, a little bit of a doji candle there. We just kind of weren't sure which way we wanted to go, and apparently we wanted to go down, but really hard bounce here off of the 3900 level that Riz was talking about in our elite membership. But man, on Friday, what a move. It looked like we were going to push higher. We pushed over the 4000 level, and then a hardcore rejection, pushing back down, ending up minus 1% on the day. And as I mentioned in the intro, down almost 7% since Jackson Hole. Riz, what in the world is going on?
Yeah, a lot of volatility, as you said, just complete meltdown. If you really, and this was not coming as a surprise of a pullback. It's not a surprise pullback, honestly. If you've been paying attention, whether you're in elite or not, or you've been watching our videos religiously, which I hope you are, and of course are subscribed. We aren't. This isn't unexpected. Chris, that trend line there from April is beautiful. It's fantastic how that's held up. It's perfect. Really a masterclass in for people to see it done. Really live, week by week. And I feel like, apart from that, apart from technicals, the reason we're seeing this pullback now is because the market is now repricing in. If you recall, I said it was maybe last week or the week before that, I said, the market was thinking, okay, maybe the Fed's going to pivot. It's going to go less aggressive on the rate hikes. Maybe they do a half a basis point. Maybe they do a 25 basis point. The market was kind of wishy-washy on that. But after Jackson Hole, Powell said we were planning on sticking with it. We plan on bringing inflation down as fast as we can. And if that causes a slowdown in the economy, aka a recession, even though technically we are in one, then it's really something that remains to be seen. But right now the market's pricing in a potential 75 basis point rate hike now coming up. I don't have the date. I know when Canada's is, which is next week on, what is that, Wednesday? That's September the 7th, to be specific. So that's for Canada. US, I'll post it and I'll update the catalyst and the dates for the Fed meeting in Elite. But for now, we do know that there is one this month in September. So, and the Fed board members themselves don't know when they're going to be doing or how much they're going to be doing, what rate hike they'll be doing. So that's why the market's pulling back. Apart from technicals, like I say, you can't just draw lines on a chart and expect everything to be hunky-dory. It's not that easy. We have to look at broader macro events, all that kind of stuff. So I didn't expect Friday's sell-off. It did, like you said, look like it was gonna, do well. We opened up a little green, and then it just gave everything back and it just waterfall downwards. I have said that 3,900 is a good next level. I feel like that's key right now. I would not be surprised if we do get that. This is a short week, though. Remember, this is a short week. We are in a long weekend for Labor Day. For those of you not in the U.S., markets are closed on Monday. So Tuesday to Friday is what we have in terms of trading days. I would not be surprised if we see a bit of a fade this week, just solely based on momentum. Some of us in Elite, along with myself, we did capitalize on this pullback. So I feel like this is something we have done well in elite, if I may say so. I don't want to, toot my own horn, but ultimately, I feel like we've got, captured this downplay, this fullback. Now it really depends on where does it settle, right? I don't want to get too complacent and think, oh, this is going to continue and this is going to continue to crash and, you know, to the floor. It's just, I don't want to have that bias, nor do I want to have the bias that, okay, it's gonna come up. So I remain very, very agile. I mentioned below the market's pretty oversold. Again, not officially from an RSI standpoint, but it's getting there. So notice how the market has kind of really quickly gone from being overbought, okay, to now potentially getting to a point where it's very oversold. Getting there, not yet. So I remain to keep an eye on that, but 3,900 is key level. A break below 3,900 next week. Again, just solely based on momentum doesn't mean we're going to puke all the way to 3,700. But again, 3,800 would be next. If you're thinking, well, Riz, this is obvious. I say it's obvious in hindsight. It always looks easy, and doesn't mean I'm right all the time, but it always looks easy, right? Like, people could say, "Oh, Chris drew that trend line. It looks easy," and in hindsight, it looks like, oh, okay, it was bound to happen, but not necessarily, right? The fact that Chris pretty much nailed it is pretty marvelous itself. So I always say, be agile, right? Be ready to make sure you are able to actually pivot and adjust as markets go. So, I actually took a long position. I'm not going to talk about it right now because it's specific to elite only. And speaking of elite only, I'm going to be also sharing in the next couple of days the sought after buy list slash maybe a tiered buy list along with the market game plan with specific levels. For those of you that have been around in elite since May of this year, know that that's a very important evolution of the initial dip buy list from March, or it's from, I think, April or something, 2020. So it's been a pretty big tradition that many members wait for, and it comes for free, and it comes for elite members specifically. So it's another value add. But with that said, keep an eye on 3,900. I still have a bunch of long positions. I'm pretty set in regards to cash pile. Like, I have a 45% cash pile still. I'm fortunate to have enough capital to be able to add if I do want, but I feel like it's enough now. Like, I feel like, how much is too much, right? Like, I don't need to be running 5-10 million in the market for the hell of it, just for, making myself feel better. I don't really need to do that. Having a few million is more than enough. Again, that's not to say that's what you need. You don't need that. You could do more than fine with, smaller amounts. But for me, I rather back myself. That's really what it is. If I believe in my trading, I believe in myself, which I do, in my track record and my pedigree and experience. Why wouldn't I? Why wouldn't I contribute, right? So I never get these fucking people on social media. Oh yeah, like, I'm gonna keep doing fucking $1,000 to $5,000 account challenges, and even if they are real, I feel like, what a sham. Because if you really were that fucking good, why would you keep doing these fucking challenges? If you were that fucking good, you would use 100K to try and get to 500K. Forget 10x, right? Forget even 5x. Maybe you try and get 100K to 250. Why rob yourself of that? So as good as account challenges can be, keep an eye on all these fuckers doing it. It's to me, I see right through it. But no trader in finance and in respectable trader will continue to just keep doing them. They won't keep doing them. Account challenges aren't bad to prove some sort of skill and strategy, like viability. But if they keep doing it, trying to entice people with small accounts to, get hyped, it's fucking bogus, right? So a little bit of a lesson there for you in capital size and backing yourself, right?
Absolutely no. I think it's important to always continue to grow and not to limit yourself. In the market, always keep adding to that account when you can. That's really the best way to keep that incremental growth going in your trading account, so you can take more positions or larger positions if you have a solid strategy like we teach here in Elite. Of course. The masterclass is a great way to do that. If you haven't taken that already, I highly recommend it. I'm a product of that class, so I can't recommend it enough. for all of you. If you haven't done it, definitely something you should take a look at. You can check that link down in the description if that's something that you're interested in. But now let's go ahead and move on here, and let's take a look at what's going on in the various sectors in the market. And I feel like I'm kind of beating a dead horse here. I feel like it's been this way for a while, but energy is still rocketing up here with oil, and then just energy in general around the world has been up this year, to say the least. Utilities, somewhat as a byproduct of that, is up as well. And then healthcare, financials, real estate, and tech are all down below the zero line at this point, especially tech. Tech is taking an absolute beating here this last week with this rollover in the market. Riz, do you have any insights from here?
No, I mentioned actually last week, I said if we see a continuation downwards, expect tech to pull back more.
Yep.
It'll be more volatile and on the downside. And that's exactly what rang true. So again, I hope you guys, whether you're an elite or not, or watching this recording afterwards on YouTube, you're a subscriber, you're a loyal follower. I appreciate that. And I hope you're actually seeing it, week by week, how we break things down, how we don't just try and tell the future, but we go based on precedent. We go based on experience and probabilities. And you can see that occur just with this, right? How it's not, shouldn't be, I would say, come out of the blue or a surprise that, tech sold off more. And I called that last week, with utilities still holding up. So as I mentioned, they were in a massive risk-off environment from last week. We've seen a lot of withdrawals and capital outflows. For those of you that don't know what I mean by that, that just means, the average person, along with especially institutions, are actually pulling back their bets, in the market, meaning they're maybe closing their long positions, maybe they're shorting and going, downward exposure. So all that has an impact. If you decrease demand for something, well, that can push pricing lower, right? And that's really what pricing is in the capital markets. It's a struggle. It's like a I can't remember the word, but ultimately it's a tug of a battle between buyers and sellers, and kind of seeing who kind of comes up on top.
Tug of war, I think, is the expression you're looking for.
Tug of war.
Yep.
Yeah, there it is.
No problem. Hey, doing math on stream, that's tough. Remembering things is tough too. Trust me, I know. I've done it before. So, I mean, like, in this type of environment, does it make more sense to be looking more towards the short side, or, should we be looking to buy the dip? Yeah. What's your strategy?
Yeah, we've shorted, as elite members know. I've done it live with what I've traded, providing my entries and exits. And many people that have followed have done well. And it wasn't just this week; it was also last week as well. Some did better than others, and that's how it's going to be. But ultimately, we have shorted. Right now, I don't have a hard short position via ETF or via a specific stock or futures, right? So if you've been following along, I go short by different instruments. Right now, I did. I closed one of our ETFs shorts, SPXS, which we went long on because it's inverse. But ultimately, it's a short position on the market. I closed that a little bit earlier. To be very, very transparent, I closed that a little bit too early Friday morning, just about break even. But again, I missed that further downward move. So that's me telling you that I'm not perfect. I can't always get it right, but I think an 82% win rate for now is I'm content with for the year to date.
I'd take it. Honestly, I'd take it. And so if you've never seen this before, actually, this is an interesting little teaching point, little nugget for you. This is a 3x leverage ETF for the S&P 500. As I like to refer to it as extra small for XS. That would be SPX short, actually. But Riz always likes it when I call it extra small. And then, of course, there's SPXL, which is extra large, which is the SPX long.
Chris, I
ETF.
remember those good old days of running the fund. I still remember that.
Oh, it's good stuff. Nothing like extra small and extra large. All right, let's keep going. Let's take a look here at some commodities. Oil has been a little bit interesting here lately. Of course, we had this nice double top formation rejection and came back down here to this 85 level, which is holding on pretty tight for oil. We did push up earlier in the week, and then definitely a bit of selling going on as far as oil is concerned. Gold is still in its channel. I feel like I've been saying that all year because that's just all that gold does right now. Came down here and tapped our support line here in about the latter half of July, bounced off of that, came back up, and then a nice rejection here of this 1765 area. Didn't quite make it back down to 1680 this time before we rebounded on Friday as the market sold off a bit. But Riz, what do you see for oil? I know that there's a lot of different schools of thought out there now. I know we've talked about the fact that the economy really can't run on $120 oil, but going into the winter months, do you think that we'll see a break below 85, or do you think we're going to hang on pretty tight there?
Yeah, good question. So that's what I'm keeping an eye on. Last week I mentioned that, look, if we see, we could see oil maybe get to 85. If we do, I might consider a long. And I stand by that. Again, for transparency, no position yet. Okay, I don't jump head first, headlong, just on a specific touch point. I need some confirmation. I need further catalyst to confirm it. Right now, we still remain to see if OPEC does decide to cut supply. Would it happen? Is there any inclination or confirmation of that? Nothing yet. So I'm waiting. And I knew it was a long weekend. I avoid carrying too many directional positions on asset classes, whether it's oil or whether it's anything else, really any commodity, through a long weekend. Okay, so that's something I'm keeping an eye on. I mentioned it last week, and right here we are near 85, right? As far as gold as well, I said, maybe if we get to 1670, 1680, that might be a good touch point to keep an eye on. Doesn't mean we go headlong and buy it. But I'm keeping an eye on it. I know that's not what people really want to hear, but that's really what it is. I take it day by day. Again, that's why I say, if people really want the access, people really want to see what I'm doing real time, when I'm in, when I'm out, my rationale, then they got to be in elite. Otherwise, you're gonna have to settle for me providing enough value to make it worthwhile to just watch even a recording, but you're not going to get the exact precise entries, right? That's just the way it is. So I'm keeping an eye on it. Again, no position yet though.
And I think that's, a really important thing to, talk about is sometimes it really doesn't pay to just go for it the minute you get there. You want to see some type of confirmation of the move because, we could see a pretty solid break below 85. And if you just jump in here at 85.41 where it closed out on Friday, well, you'd be kind of kicking yourself because you didn't wait for it to confirm. So I think that's something it takes a lot of patience and training and work to understand what you need to look for when you get in a position, when you get out, because we're never going to truly be able to time the market, to bottom pick it and top tick it. It's incredibly rare. It does happen, but it's more luck than anything else.
Dealing with any level of consistency, to add to that, Chris, it's extremely hard. It's not viable. And if someone, like I say all the time, if it sounds too good to be true, if someone is not able to verify and prove to you any claim, just be very, very cautious, right? And that's why I prove it to elite member. I don't just say, I have an 82% win ratio. I share the wins and losses numbers every trade. And then I also, tell people, look, you can easily back test it. If you're an elite, you see the trades that I've taken throughout the year, plus my exit. I provide update on my exit. So if you really have the time and you have the inclination and you feel like you're not completely sold on me and my word, well, by all means, back test that if you're an elite. So yeah, for those of you that are not elite, well, it's your loss. I make it no secret that if people want to level up, people want to be better, people want to really change their perspective on how to operate in markets, the masterclass and elite is the place to be, period. I can't state that any clearer. And yeah, the 82% win ratio, win rate is holding up for now. We have a couple of positions that are in the red, but that's fine. They're great, solid companies that have conviction. Um, and we just had to ride out this kind of market volatility, um, which will eventually end, which will eventually, you know, we're not in a bear market permanently. We're not in a economic slowdown permanently. So when it does rotate, we will be in a good place.
Very well said. Very well said. Something that's not in a good place right now is cryptocurrency getting absolutely slapped around like a rag doll at this point. Bitcoin is just, in the doldrums here around this 20,000 per coin level. Can't seem to get out of the gravity of this area. Really just stuck between this 25 and 20,000 level on Bitcoin currently below it, but it likes to hover around this area for the most part, and really not much going on in crypto as a whole from what I'm seeing at this point.
Yep, I agree. You can notice it did get a little bit oversold there officially on the RSI, but yeah, I have no position. I mentioned last week that I did trade it a few months back. I posted for Instagram and Elite, when I got in, when I got out for profits, and yeah, it's really back to below to when I first entered. So I'm glad I took the gains.
Yep, absolutely. All right, I posted in the chat here. I asked people to start posting their questions, and thank you for all of you who have done so. Yas wants to know, in reference to our discussion about oil, would it make sense to take a position here in UGA, which is the United States Gasoline Fund? Riz, what are your thoughts on this one? Looks like it's getting beat down.
Yeah, I would personally, if you really want, you could really go with USO. It's something that we trade often. Jets, we trade USO often. Dude, you're going to see, something similar going on. I find that for a shorter term kind of position, USO is something really what you want to do with. And you could see it's also right at the moving average for the 200, I believe. So yeah, whether you go UGA or USO, it's up to you. But as far as taking long, like I said, you can't. It's if you're going solely based on technicals, look at that hard support on USO specifically, and of course that 200-day moving average. So the USO will track price per barrel move, right? UGA, I believe, I think it's more of a. I don't think it's exactly the price per barrel, right? It's more so other things. It's another company, right? UGA is, I think, is another company or ATF. Sorry, if I'm not mistaken, right? I personally prefer to trade USO because I can trade directly the move in price per barrel, right? So if US price per barrel on Tuesday or Monday, let's say drops, 1%, USO will be down 1% on Tuesday. So I like that. I like that tracking there.
Fair enough. Fair enough. All right. Ricardo wants to know, is it a good idea to short ENPH below 272? Well, let's take a look. Took a second to load there. There we go. Yeah, I mean, quite the run up here on N phase, and it seems to be kind of consolidating. I'm not sure if it's ready for a short, but what do you think, Riz?
Yeah, this is funny. Ricardo mentioned. I actually saw this came up on. It's part of my watch list. So I believe it's a utilities company, if I'm not mistaken. Chris, I think if you pull up the description panel, let's see. Let's correct me if I'm wrong. All the way up top. All the way up top. First one. Yep. So let's see. It is scroll down. Yep. Energy.
It's
Okay. Scroll
semiconductors.
down. Yeah. Let's see what else is there. Scroll down further. Down further, what does it say? Yeah, design, develop, and manufacture. Okay, it's a microinverter. So I am corrected there. It's not just the utilities company. They provide a bunch more stuff. So I think this, from a technical standpoint, I actually would say this is more of a short. As for their earnings, they had good earnings, so I'm assuming that's one of the catalysts that obviously right there that you can see that gap up there. That's really helped. That really helped them kind of rally. But I think it's definitely overdone. It was overbought, and I think we could be in for a little bit of a pullback. So yeah, this is pretty good for a short from a technical standpoint. As a company, it obviously seems to be doing good just from a first glance from earnings perspective. I haven't looked at the financials, but ultimately, yeah, you don't want to short these things from a long-term standpoint, from a technical standpoint. Yeah, see if it kind of comes down at next open. Then I think that might be your key to maybe run it to 260 and maybe below. right? Just something to keep an eye on.
What I would want to see on this one, Ricardo, I'd want to see it close below 272, honestly, before I would consider it, because it's bounced off here several times. And if that holds on, then you may be in. Yeah, you want confirmation, that's for sure.
Yeah, I agree with Chris. That's definitely a more safer bet. If you really are feeling bearish on it and you have the risk tolerance to see it through, maybe you could take a starter, and then you get
Uh,
confirmation around 270, 273, 272, and then you add in a little bit, right, to see if it runs lower. But of course, with these kinds of trades, you want to have a key stop, a key area where the trade's done. These are not kind of things that you just hold perpetually. So just something to keep in mind.
so Riz, what are you looking at this week? Let's give our YouTube subscribers a little insight. What are some things you're keeping an eye on?
Great. Yeah. Yeah. Cool. Awesome. So a lot of things are looking really good to me. I'll play my hand a little bit for those that are not in elite and that have been following us on Instagram and are on YouTube, to give them a little bit something. Take a look at Google, GOOG. This is one of my favorites at this price point. It's I obviously know the fundamentals on this, traded this a lot. So this one is by every measure, it is undervalued, which is not something we see happen often. Now, there are certain issues as to why the market has kind of been soured on it. The biggest one, and the one that no one can really answer with any confidence or any level of clarity, is the potential for maybe the government and regulators to come in and say, okay, maybe Google is too big, it's too monopolistic. It's too big and has too much market share and is stifling competition. So maybe we need to kind of see if we need to do an internal audit on it or try and break it up. Now, this isn't common. This doesn't happen common. It used to happen back in the 80s and 90s and before, but the last 20 plus years, the regulators have been asleep at the wheel. So if it does happen, it will be a landmark case, something that hasn't happened in decades. But that's kind of the risk. But other than that, this is a fantastic company. It's Google, like whether it's YouTube or whether it's your search, whether it's Google Maps, whether it's all the other things that they do to generate ad revenue and monetization, you can't really compete. And in that sense, it's great to be an investor for that in a company that has such a massive moat that you can't even fathom being a competition to Google. If you're not in already and just surviving, there's no new players in the space. So that's something that you want to see. And of course, the same applies to other companies, but Google is just one example. I will give uh, another one. This one's completely different. This one is another one I completely like. It's very like it's J&J, Johnson and Johnson's company. I'm sure everyone's heard of, um, and this is a great consumer staple slash pharma company. It obviously has its hands in a lot of different brands and things. So there's no doubt that if you're alive and you are in any country, really, you at some point have exposure to J&J's products. Okay, uh, whether it's toothpaste to household cleaners to uh, regular regular use medications, you name it. So this is another fantastic company. Again, none of these companies I'm bringing up is just you go headlong and buy. I'm saying these are companies you should be comfortable with being aware of and buying systematically according to your account value and your risk tolerance and thesis. But these are two that I can vouch for. These are ones I like, and I will play my hand here. Like I said, they will be in the potential buy list. So that's some added you know tidbits for you guys who are not in elite. You know, get something a little bit added there for you. But for those in elite, you guys will get uh, the full beans.
And let me tell you, for those of you who are not an elite, that dip buy list that Riz is talking about is extensive, to say the least. It is considerably more than to the two tickers that we have given you here, just to keep an eye on. And of course, when we take our positions in Elite, we will alert all of our members immediately when we get in and when we get out, so that you can time our entries and exits. Riz, what are you looking forward to here in the market, this week? Obviously, we mentioned it's a short week because Monday's off because of Labor Day. Is there any, catalysts we need to be aware of or things that are going on?
I would, yeah. So personally, I am just short weeks are very tough to call. But if I had to, I would say, market is in a risk off mode, and it has been since Jackson Hole over a week ago. So if I had to, I would say, look out below. But that doesn't mean, you're going short anything and everything. You have to be careful when you're doing those kinds of trades. And it doesn't mean you have to sell your great companies, right? I still hold a decent chunk of great companies, which gives me long exposure to market, meaning if markets go up, then those companies will do well as well. So, of course, I still have, like I said before, about 45% cash plus margin, which is in the millions. So I'm okay with seeing where the market goes. I would not shy away from an opportunity where if markets go lower, that gives me the opportunity to get in some amazing companies at great prices. By no means am I saying I'm going to be able to get the bottom, but I will definitely try and take advantage because I have the risk tolerance and I have the time horizon. I'm not here to try and make enough money so I can go out and, flex in a Lambo or some shit in a few months. No, I have a bigger vision. I have a longer term time frame, and for me personally, there's other things that are more important. So, yeah, if you can relate to that even a little bit, then absolutely, it's something you want to relish and take the opportunity. So that's why I say if you add capital to your account, like I have throughout the year, doesn't mean you have to go in and buy stuff right away. Let that capital be in there. It's ready. It's ammunition ready to, be used. It's dry powder. It's there for you to use. It's like, having your soldiers and you have them at the ready to deploy. And that's really what it is. You don't have to go and send them out right now. So, again, elite members will be privy to exactly what I buy when I buy. But I would say, to recap, there is some downside. I do see the Fed raising 75 basis points this month. And then what they say after that rate decision in the minutes that do get released will be a key indicator of how they proceed going forward. So I don't think October, I could be mistaken. I don't think October has a market. The Federal Reserve doesn't have a meeting. So I don't think there's a rate decision in October. But I think there's one in November, if I'm not mistaken. So that would leave maybe one more potential rate hike. And I think the Fed is not going to do. I think this could, you can hold me accountable to this in the months to come. But I think this could be the last 75 basis point rate hike for the year. Okay, so you can make note of this and then remind yourself to remind Riz of what happened and say, Riz, well, you nailed it, or Riz, hey, you got that one wrong, and I'd gladly be willing to hear that.
Awesome, amazing insights. Of course, I want to thank all of our elite members for coming here to our live webinar and participating. It's great having all of you here. And of course, for all of our subscribers on YouTube, thank you for watching this replay. Really appreciate it. If you haven't done so, click that like and subscribe button. Have a wonderful long weekend. And I guess this time we'll see you in the markets on Tuesday, not on Monday. Good night, everybody.